Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Wednesday, February 27th. The stock market opened on a down note today following 3 consecutive sessions of gains. Investor sentiment was lifted, however, when regulators announced the lending caps on Fannie Mae and Freddie Mac would be lifted to promote additional lending in the housing market. Despite the announcement, stocks slipped in afternoon trading to finish the day slightly lower. Fed Chairman Ben Bernanke made no surprises at his semi-annual testimony before the Financial Services Committee on Capitol Hill. Bernanke indicated that the economy continues to face challenging headwinds and that the Fed will likely move to continue fighting those challenges with further rate cuts, rather than hold back as a result of inflationary pressures. January durable goods orders fell 5.3% when compared with December orders, which had shown an increase of 4.4% from the previous month. Though the drop was steeper than economists had expected, the news is not entirely grim, as the trailing 3-month average indicates orders are flat. New home sales in January fell to 588,000 units from 605,000 in December, on a seasonally adjusted annualized basis. The results were worse than expected, as economists pegged January sales at 600,000 units. New home sales remain one of the weakest segments in the housing industry. Such weakness was made further evident by a first-quarter earnings loss of 61 cents per share by luxury home builder Toll Brothers. Analysts had been calling for a loss of just 50 cents per share. According to the subsidized home lender Fannie Mae, the housing industry is unlikely to improve anytime soon. The company announced today a loss of $2.1 billion, or $2.63 per share, for fiscal 2007. Last year, the company earned $4.1 billion, or $3.65 per share. Fannie Mae believes there will be further tightening in the mortgage lending market in 2008. Should current conditions persist, the company will likely face additional write-downs. In a move to help restore the home lending market, the Office of Federal Housing Enterprise Oversight, otherwise OFEO, will remove the portfolio growth caps for both Fannie Mae and its smaller cousin Freddie Mac, effective March 1st. OFEO is also considering relaxing the capital requirements the two lenders adhere to. OFEO's move should bode well for the mortgage market, since increased capital availability adds liquidity to the secondary mortgage market. In other regulatory news, Microsoft was slapped with a $1.35 billion fine by the European Union for violating antitrust laws. The penalty was the largest ever levied by European regulators. Microsoft had already announced efforts to increase product openness and interoperability before the decision was announced. A bearish report from the Department of Energy induced oil to pull off the $100 mark. The report indicated that oil stores increased by 3.2 million barrels, or 1%, to 308.5 million barrels. Analysts were anticipating a build of 2.7 million barrels, according to Bloomberg.com. Prior to the announcement, oil hit a $102 per barrel high in intraday trading. Gold prices hit an all-time high of $967.70 per ounce in intraday trading. Commodities have been stretching higher partly as a result of a weak dollar. The dollar index hit an all-time low today, falling to 74.07. Meanwhile, the euro hit an all-time high against the dollar, stretching higher to $1.51. I'm Jeffrey Ham for Briefing.com. Thanks for listening and have a great evening.